Silver girl, sail on by. Your time has come to shine.
Hello and welcome to the Contrarian News Network. My name is Michael Yates and I'll be your host for this edition of what I'm calling the greatest two trades in history. Yes, what I believe to be two trades that'll make you a multi-millionaire if you have the money to invest. And so with that, let's kick it off and talk about what these two trades are. Being this is the Contrarian News Network, of course we're going to be talking about two trades that are contrarian trades right now. Everybody's on the bandwagon of the stock market. Companies that are so overvalued, so overbought. When you take into consideration all of the share buybacks to boost earnings per share, things are just so heated right now. So I'm going to talk to you about a couple of trades that you probably haven't thought of, and trades that you'd be in the stealth mode, as they call it, to get into right now. And of course, it'll require some patience and time. These are not trades that you're going to make money by noon. These are trades you have to stick around, but the payoff is going to be absolutely huge, monstrous. So let's kick it off. The first one, one trade is a short and one trade is a long. So we'll start with the short trade. I've alluded to this earlier in another video. It's the Russell 2000. And I pull up a screenshot here of the long-term chart on the Russell. It's about a 10-year chart, give or take. And if you want to have a close look at this, what you'll see is that 2013 we have this very low volatility melt up. It was a big year for the Russell, big year for most indexes. You can see here how there's just practically no volatility at all. No corrections, no rocking of the boat. That's a bad sign when it goes on for too long. And so now, of course, that we've gone through that stage, what is always comes after that stage is, of course, high volatility. Sure as the sun follows the moon and the moon follows the sun, you can expect high volatility. So here's a 5-year chart of the Russell. Now in this chart here you can see a little bit better what's going on lately. I've alluded to this double top that has formed. Have a look in this 5-year chart. You can see the double top. You can also see a rolling over. You notice that we had this continual march upwards on the Russell, which was pretty obvious in the chart. Look at this chart here. You can see how it's there's a rolling over. It's kind of rounded at the top now. It's no longer going up as it used to be, and not so long ago. That's another very bad sign for any kind of a market. And you'll notice that even on this 5-year chart here, you've got to go back a long ways before you see a rounded top formation. Geez, it looks like about 3 years or so. It looked like we had a bit of a rounded top, and that just led to a correction. But again, we had not had this low volatility melt up that you can see clearly on this chart. Very little volatility, very few corrections of any kind of substance, and now we have this rolling over. So anybody out there who understands technical analysis and can read charts, you know what I'm talking about. Very bad sign. Now I'm going to pull up a 2-year chart on the Russell, and this trend becomes even more clear. Of course, you can still see this double top that has formed. It's not just formed; it's formed and it's finished. We're now rolling down the other side of the second top, and beyond that, we're approaching the 1100 mark, which is the historical, I guess probably the last year or so, support for the Russell. And so we'll see what happens with that. And I think I've mentioned this before, but as much as anybody else, I believe that if the Fed panics and hits the print button 1,000 times per minute, like they've been doing for a few years, of course they'll blow this pattern out of the water. But they've already told us they're not going to do that. And now we've got large restaurant chains coming out announcing on CBC did an article on this, how they're starting to see major inflation in their ingredients, so their food ingredients to their dishes. And so the Fed, of course, knew this a year ago or even longer, which is why they had to stop the QE, because the worst nightmare for them is inflation that's run away and got out of control, because there's nothing they can do about that. You cannot print money to stop inflation. Obviously, all it does is get worse. So when you got rates as low as they've ever been, the only option they'll have at that point, if inflation does start to run away, and it always does, because before you see inflation, inflation is one of those things where it builds up for a long time. You don't see it, and then once you do see it, the momentum behind it is such that it's going to go a lot further and a lot faster than you think. And so they're stopping the QE now, but it's too late. Inflation is already on the way, and it's going to come, and there's nothing they can do about it. So the one thing that might help a bit is raising rates, but that's going to be very disastrous for the economy, with everybody thinking that 2% or 3% is a normal mortgage rate on their home, and of course have factored that into their budget. So nothing they can do about it. So this is just going to happen, and the Fed's going to have to stop printing unless they want to cause even more damage. So with that being the case, I don't think we're going to see printing unless, of course, this thing just goes nuclear, goes Chernobyl on us, in which case they'll have to print, and they'll have to print large. And yes, in that point in time, I would say go and buy yourself some long contracts on whatever. Throw a dart at the board. But for right now, this is not looking good, and I would say you want to make yourself a whole lot of money. Go short this Russell. Go short any one of the indexes for that matter. You can see the DAX in Germany has rolled over. Take a look at any one of the charts for any major index, and you can see what's going on. Got to take off the QE beer goggles though, and have a good look around to be able to see this, which most traders aren't willing to do. They just think that QE will be forever and markets will go up forever, and we got this new paradigm, and that's exactly when things blow up. Okay, so one trade down. Now the next trade is a long trade. And again, this is the Contrarian News Network, so you're going to get a contrarian a call out of me. And that is, here's the chart. It's the GDX, the gold miners chart. And of course, gold miners have been absolutely slaughtered over the last few years, and people like to laugh at it. Well, that's when you have opportunity. When everybody hates it to death, and people do hate miners to death right now. And I'll be I'll jump on their graves with you, because they made a lot of stupid mistakes. The spending that these guys, or should I say that the lack of discipline in their spending, they deserve what they're getting. I couldn't agree more. But now that they've been absolutely trounced, many of them selling for practically asset value or even below sometimes, this is a time to get in there in the stealth mode and pick these shares up really cheap and enjoy the ride up, especially now that we've got inflation coming on. Gold loves inflation, always has, always will. And so here's a chart of a 5-year GDX, and if you have a look here, kind of a converse situation than we have from Russell. It's been beaten up, but you can see it's turned the corner. It looks like it's made a bottom somewhere in the middle there, and it's been bouncing around. But as you can see, we're making higher lows and higher highs since somewhere around that bottom. You can see in the middle of the chart there, it looks like make a bottom. You got a higher low and a higher highs, and there's definitely a clear uptrend now. With this guy, there is so much upward potential that it's who knows. The sky truly is the limit for the miners, because with inflation just starting to rear its ugly head, and gold has been trashed like probably never before, one of the worst trashings of gold we've ever seen. This could go a very, very long way. Now, my only caveat with the gold miners is that if we do see a major market crash, and of course all the talking heads never see a market crash coming, it's always just a little 10% correction. Don't know how they explain things like 1987, 2001, and 2007 with that doctrine, but nonetheless, if we do see a major market crash, of course gold miners are going to go down with that. It's like we saw down in 2008. It doesn't matter, everything gets sold wholesale, people panic, and it doesn't matter what they have, it doesn't matter how much sense it makes to hang on to it, they sell it anyway. So the caveat is that if we see a major crash, gold miners, no matter how cheap they are, they're still going to get sold off, but they have a lot less of a fall ahead of them than do some companies where we have 26, 27, 28 PEs, and that's even with the share buybacks. Those companies have a long way to go, like these companies on the Russell. And so going along the GDX would be a good trade. Now that's a long year. That's about a 5-year chart. Let's pull up a 2-year chart on the GDX, and here you can see it. Excuse me. A little more clearly taking shape. It's not a lot different, but you can see a little more clearly that bottoming took place. It looks like a bottom that we have there, and marching on upwards. So these are two trades that I think could literally make a millionaire out of you if you play them right. I would suggest that probably go a little heavy on the shorting, because like I said, the shorts will take out the GDX if the market does crash, and so you'll be happy to make some money on that. But a little bit in each is probably a good play at this point in time. Hope you've enjoyed that from the Contrarian News Network, the ultimate contrarian call. You have a great day, great evening.
Sail on.